Welcome to the Sierra Charting Club, brought to you by Infinity Futures. Imagine, what if you had your own personal Sierra chart expert? Let's take a look at the Relative Momentum Index, not to be confused with the Relative Strength Index, RSI. The RMI is an oscillator, oscillates between 0 and 100. And the calculation is relatively simple. It is a moving average, but it's a moving average of a ratio. And that ratio is the average one-day gain, or one period gain, depending on what kind of chart you're looking at. Here we have a crude oil daily chart. So we're going to say one-day gain, average one-day gain over a set amount of days. Here I have it set for 5. So it's the average one-day gain over the past 5 days divided by the average one-day loss over the past 5 days. And X is a variable. You could make that as long and short as you want. Once you calculate that number, then you apply the moving average, which in this case is a 9-day moving average, to create the oscillator. Okay, so there's two components of this thing: average one-day gain divided by average one-day loss, and then the moving average of that result. Let's take a look at how to add it, and then we'll come back to this chart and talk about how to analyze it. To add, it's pretty simple. You're just going to take a chart, any chart, pick a card, any card. You're going to go to Analysis and Studies, and you're going to scroll down until you see Relative Momentum Index, RMI, and you're going to add it. Notice I already have the inside bar study here, but ignore that. That's irrelevant. So I'm going to go ahead and look at the settings, and sure enough, we have the RMI length set at 5. Average winners over a certain amount of days divided by average losers over a certain amount of days. This is set at 5. That's the default. You could experiment by changing that number to anything you'd like. The moving average of the result I have set at 9. Again, this is kind of a default standard. Overbought value is 70. That's default, and oversold value is 30. That's default. I adjust it to 80-20, but you could do whatever you'd like. And I would recommend you experiment with that and look at it at different markets also. Colors, we're just going to change the colors a little bit. I want to make the line blue. This lime green's not working for me. Make it a little bigger. Overbought. We'll go ahead and put a red line there. Oversold. We'll put a red line there. It should stand out. It's nice and bright. The midline I don't care about, so I'm going to leave it alone. Hit apply and OK. Apply and OK. And now the study is set down below in the second region of your graph, as you can see it right here. So how do you use this thing? Well, everybody's interpretation is different, and again, it's an indicator. It doesn't project price. It doesn't give you a target. It doesn't give you support and resistance. It gives you general momentum. And again, areas over at the top here, and again I have mine set to 80 instead of 70, are considered overbought. Areas below the 20 line or 30 line, if you choose to take the standard settings, are considered oversold. And the thing I like to look for is gradual momentum. And you can see here from, I don't know, it's June 21st up to July 2nd, a nice 45-degree slope going from the center, almost the center line at 50, up into the overbought area on a nice 45-degree slope. And I think that's kind of cool because it's giving you real market momentum. Alternatively, here when we break down from the overbought scenario into the main area, the slope is much steeper, and that's simply due to, you have a big bar here, right? You have a big event. Something happened here to trigger a change in direction. So this was a trigger. This wasn't really a smooth momentum swing, but it does give you an idea that things are changing, that the momentum is changing, and the direction of the market is changing. So that's kind of two ways to look at RSI, RMI, and how to use it. Not necessarily, hey, when it crosses up over the 80 line, start selling, or hey, when it crosses down below the 20 line, start buying. Those could be strategies if they're consistent with something else you're doing. But in this particular case, think about, hey, is the market in a bull market still? Is that bull market accelerating or slowing down? And is it peaking out? And if it's peaking out, then you could develop a trade strategy according to that peak. Hope that helps. Thanks.